Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is September the 19th, 2020. If you thought last week was a volatile week in the market, you ain't seen nothing yet. You had the passing of Ruth Bader Ginsburg yesterday. The volatility in the market this coming week is going to heat up. I'm not saying it's necessarily going to go down, although it's not looking good when you take a look at how we closed out the week last week. But the volatility, meaning the dirty shenanigans, the fake news, whatever, before the election is going to be absolutely and utterly insane. So strap up, strap in, get ready, because it's going to get nothing but nuts from here as we close out the final days of the pre-election cycle. But before I begin, please subscribe to the channel. I'm going to be using TrendSpider today, 35% discount code below if you'd like to use it. Our performance last week, let's go to that. You know, before I go to that, I'm up at the lake right now. I just want to show you where I'm at. Look at the view out here. You should have seen the fog on the water early this morning. It was really chilly. And I did the weekend commentary, which is posted in the members area. And it was about 44 degrees at that point in time. But I said, you know what? It's worth it. I bundled up, had a hoodie on, and really spectacular weekend. Looking forward to getting back tomorrow. We'll be doing Sunday night stock charts live tomorrow night, 6 p.m. Eastern Standard Time. There's a link below. Enter your email address to get notified 15 minutes to a half hour before we go live. That way you don't miss it. Sometimes YouTube does not send out the alert buttons or the alerts when I go live. When you click that bell button, do both. Enter your email address, we hate spam too, and click that bell button, subscribe, etc. All right, how was our week last week? We didn't do much last week. What we did is we did book profits on U.S. Steel. That was 22% profit. And we're looking to get back into this trade. Let's talk about that for a moment. Let's go to U.S. Steel first. U.S. Steel had resistance at the $8 per share mark. And I mentioned to members that were we able to close just above the $8.24 mark, I would look to add more to the position. However, we just shot through it like a hot knife through butter. The shorts covered, and we surged on Friday up and through the third standard deviation Bollinger Band. Now, I have a rule that I really don't like to hold positions that are trading up and through the third standard deviation Bollinger Band, especially a position that is just building a base, really just breaking out of a bear market. You're going to get a lot of backing and filling. To think that we're just going to go shooting straight up higher to new all-time highs or even above the pivot point at $10.94 without retesting some support levels first, that's delusional. So we booked our profits, and sure enough, the shares faded on the day. Still up on the day. What were they up by? Over 4 3/4%. So we're looking for a pullback retest. I spoke about this with members on the weekend commentary, posted in the members area already. So members, go check that out if you haven't checked it out already. So good trade. We're looking to get back in. Love U.S. Steel. With regard to the rest of our portfolio, you know, what's been driving the markets down has been technology. I warned about the triple Qs, in particular Microsoft, Apple, being very, very overbought. And sure enough, last week, they continued to tank, dragging down the rest of the market. That's what's putting pressure on the entire market. You had too few stocks leading the market up higher. Now as we're rolling over, you're having margin calls. That's forcing people to sell whatever they can sell, and they're probably not selling their tech losers, which they should be selling first because they're not working anymore. They still believe that all they're doing is going to go to all-time highs. They're sorely mistaken. That bubble's busted now. Now you need to start looking at materials, stocks that benefit from higher inflation, stocks that benefit, like the banks, from a breakout in yields, which is what we saw last week. Again, I spoke about that with members on the weekend commentary, our strategy session for the next coming week. Our bank trade last week, while it faded off the highs of the week, still closed up while the S&P 500 was down along with tech. I've been talking about sector rotation for weeks now, in private with members, but also in public with non-members, because I don't want to see anybody get burned in this market. Let's get to the charts we're watching for the new trading week. I'm going to run them down in this order. I already did steel. TXG, that's a long arch coal. Beautiful chart, but I'm looking to short it. I'll go over that in a moment. Dollar General, looking good. ALDX, GLOP and GLOG, fellow member Pat, if you're watching it, I thought about you when these came up on my screener. We've analyzed these symbols before. TCP, I've always been watching this one. This is a 9% plus yielder, and it's beginning to show signs of strength. We'll talk about SPXS and the LABU as well, and that's the leverage ETF putting you long of the biotech. So let's do it. First up is TXG. We're going to use TrendSpider because I want to talk about seasonality as well with these stocks, and I have yet to do that. And for those folks not familiar with TrendSpider, automated technical analysis, meaning if you're not familiar with how to draw your trend lines, TrendSpider is going to do it for you. Or if you are familiar, like me, what I like to do is use it to validate what I'm seeing on my charts. It's like my spell check for technical analysis. So TXG, we're going to go with weekly charts. So why do we like 10x Genomics? Well, we had broken out the week before last. Last week was an inside week, very close, if not. No, we did retest the breakout point. So right here was our breakout point. We did a retest last week, which is great to see. Anybody who follows me knows I love to see retests. We also broke out on Friday. So while we were down on the week, we did not put in a new weekly low. We bounced off the support level that you would want to see us bounce off of. In terms of seasonality, I don't know how much seasonality there is going to be here. I'm not sure how old this stock is. Let's take a look. You want to have, there's not enough data here to go through seasonality. Way too thin. So TXG, it appears as though what we're going to see is a continuation breakout on TXG. We like it for the new trading week. Next chart up, Arch Coal. We're looking to short this. This is a pretty chart, no doubt about it. In all probability, it will head up higher. If it does, we'll be looking to short into that strength. Why? It's because it's overbought on a daily basis when you measured by RSI. We're up in the 80s. We're probably going to go up higher next week. And in terms of weekly price action, this is very, very pretty. One problem, though. We're trading above the third standard deviation Bollinger Band, which means that in all probability, very soon, you're going to get a pause, a pullback, consolidation, and we're looking to scalp a short profit. We're not betting that Arch Coal is going to break down and go to zero. That's not what we're looking for here. It's simply a scalp. Longer term, I really like the setup on Arch Coal. You have a beautiful base here that's built. We have broken out above the pivot point of this W formation. Here's the left side of your W, pivot point, right side building, breakout. Good stuff. It's a beautiful chart. However, a bit overdone short term, longer term, Arch Coal going up higher. Dollar General. Oh, you know what? Let's go back to Arch Coal for a moment. I didn't go over seasonality, and there's certainly a seasonality factor here with Arch Coal. So we have data going back to 2016. They must have filed bankruptcy at some point because there's certainly more data than that. Now, Arch Coal since 2016, it's only 4 years, folks, so not a lot of data here. So keep that in mind. October, we are up 100% of the times, whereas in September, up 50% of the times. Don't mind my squinting. I have the sun coming in on me here. But it's warm. It's getting warmer. Beautiful day. So seasonality favors Arch. So we're not going to want to stick around with this one to the short side very long. All we're doing is looking to scalp a couple of points to the downside, book profits, move along. Dollar General. Beautiful chart. Automated trend lines. Let's see what they bring up. Nice. They caught the breakout last week. What we're looking for is a continuation move higher. Very nice chart. Seasonality. Let's see how much data we have here. Let's go back as long as possible. The more data, the better. So in the month of September, we are up 71% of the times. That drops down in October, but picks up again in November. So a seasonally meh period of time, considering the fact that we've already run a bit here and we dropped down in October. But once you get into February, actually January, February, it really begins to pick up steam. So I like this trade from both a short-term perspective, but I wouldn't want to get too heavy. But then as we proceed into the new year, I would look to add more aggressively. So Dollar General looking very good here as we proceed into the new trading week. Just keep in mind a little bit of pressure, not a little bit, a lot of bit of pressure on this market at current. Members, I go over our strategy for the coming week on the week ahead commentary, already posted in the members area if you're just joining in. The next chart up, ALDX. We saw a breakout last week above resistance here, held nicely. We do have a volume shelf above. Basically what that implies is that you're going to have a little bit of resistance trying to break out. So while I like the weekly breakout, I would like to see us close above $7.60 per share. Let's take a look at seasonality. Again, I don't know how much data we have here. The more data, the better. It only goes back to 2014. Let's take a look at it anyway. September up 86% of the time. That drops down to 50% in October. Just be forewarned, November picks back up again. So ALDX looking good as you proceed into the new trading week. GLOP. Okay, so GLOP broke out last week. This is a weekly chart. Nice breakout. We do have considerable resistance above here. I'm going to change this resistance level to be on par with the upper band of this volume shelf. Also, what I want to do here is illustrate the breakout. We had actually broken out back here, floundered a bit, now recaptured support. A higher low double bottom setup or W formation on Stokes. Love it. Love the RSI, drifting up higher. Really good stuff. Seasonality. Only going back to 2014. September up 71% of the times. That drops down in October, but November appears to be a very, very bad month. But again, thin data, only 6 years worth of data. The next chart up is GLOG. I like this chart even better than GLOP. A clean breakout. Yes, we do have a bit more resistance above right here at this volume shelf, but a nice weekly breakout. We have 9 years worth of data on seasonality. September up 78% of the time. We dropped down in October, but in November, very strong seasonally. So I prefer GLOG over GLOP if I had to choose between the two, and frankly, I do. Look at these stochastics, higher low and breaking out. RSI, higher lows and breaking out. Exactly what you want to see. And with all these charts, folks, I go over them in greater detail on the week ahead commentary. Already posted it in the members area. If you want me to go over them again tomorrow night, join us Sunday Night Futures Live. And if I have time after I go through members stock chart requests and you want me to bring up any one of these symbols, I'll do so. So just let me know. Just join us on YouTube tomorrow night. If you're not on an email list, get on an email list. You get alerted when we go live. Just click the link below. TCP, 9% plus yielder, weekly chart. Not my favorite pick going into the new trading week, but this is one you want to keep an eye on. As long as it holds this lower band of support. If it breaks it, forget it. Adios. We're out of it. Well, we're not even going to get involved with it, I should say. Or if we do buy here, stop loss right below on a new weekly low. So what we'll be looking for is a breakout above this upper band of resistance. Perhaps we could add down here, again, with a tight stop below on a break. Let's overlay some trend lines. So you can see how TrendSpider picked up on my manual trend line to the to the penny, to be honest with you. So kudos to them. It lets me know that my skills are still quite sharp. So TCP pipeline looking good. Let's talk seasonality. How much data do we have here? 21 years worth of data. Love it. September up 59% of the times. We dropped down a bit in October. November, not a wonderful month, but we picked back up in December. Our Stokes are still declining here. This concerns me. We want to see this resolved. So ideally, we bounce around within this triangle formation for the next couple of weeks, and we see the downtrend in Stokes resolved. Either they flatten out or hook back up, one of the two, both. But no reason to go jumping in with both feet on Monday morning, by no stretch of the imagination. Perhaps a nibble, and we'll look to build a position in TCP pipeline. It's paying you to own it. It yields over 9%. So if you're looking out longer term and you're not a short-term swing trader, then it's for you. I'm both. I like to put on longer-term positions to take advantage of depressed prices and high dividends. We're doing just that right now with ExxonMobil, and TCP is another candidate. Now, LABU, I'm actually out of order. I'm going to do SPXs last. But I want to talk LABU to stick with long trades first. So you could see that last week we broke out in a very, very big way. Huge breakout. We're seeing higher lows. We broke through several resistance points last week. Now, I go over the daily chart with members. I talk about how we would want to enter this position on the week ahead commentary. Go check it out. I don't know how much data is here in terms of seasonality. Only 5 years, but let's take a look at it anyway. September, October, not wonderful months. However, November, a monster month. Up 80% of the times over the past 5 years. That's really good stuff. So keep in mind, folks, this is a leveraged ETF, not for the faint of heart. Very, very volatile. Last chart up is SPXs. So while overall, with the exception of one position last week, we did quite well. We're long of Rocket Mortgage. That did not do great last week. Didn't do horrible, didn't do great. Overall, our portfolio, while it did fade at the back half of the week, if we didn't book profits on U.S. Steel, it would have faded a bit more. But we captured most of that upside. We did see a bit of a fade, and we outperformed the S&P 500. That being said, the S&P 500 closed poor last week, and the Tues did even more poorly. So right now, the many traders out there, the Tues or the leaders of the Tues, Apple, Microsoft, Amazon, that's the market to them, especially the Robinhood day traders. That's the market to them. If they see those names rolling over, then they think the stock market's rolling over, and that hits sentiment. That has people selling stocks. So that could continue, especially if we see volatility pick up because of the election this coming week. So that leads me to want to talk about the SPXS monthly chart first. Let's talk about that. Let's take a look at what we're doing here on a monthly basis. We have stopped putting in new monthly lows. Now we're threatening to take out the prior high of last month. And when you drill down to a weekly chart, you're beginning to see higher lows get put in. And if you take your crayon out, let's see if TrendSpider picks this up. No, didn't pick it up. We broke out. Not last week, but the week before last. Last week we did a retest of the breakout point. That leads me to believe that we could see a continuation breakout this coming week. What could change that? What could change that is if we see a deal in Congress that the president will sign off for relief for those folks out there suffering from COVID. I don't mean just COVID patients. I'm talking about business owners and those who are getting unemployment benefits that were quite nice. They want them to spend that money, and that's what kept the stock market moving up higher. Absent that, that's what's causing the stock market to move lower, besides the fact that you're beginning to see people look past COVID, and all the COVID plays are now weakening up, and you're seeing cyclical names, airlines, steel, energy beginning to rally. So if we get a deal, then I would not be looking to put on, WASP, I would not be looking to put on a short trade on the market. But absent that, we'll be looking to hedge our portfolio. I'm satisfied with what we have at current. We have a huge amount of cash, and we'll look to take advantage of depressed prices if they decide to bury this market. If they sell Boeing off hard, we'll buy more Boeing. If they sell ExxonMobil off hard, we'll buy more ExxonMobil. Things that do well in a recovering economy, we want to buy. Not that we're going to new all-time highs in the S&P 500 anytime soon. You're going to need your mega caps for that. But if yields break out, then you're going to see the banks move up higher. I want to buy more banks on a continuation breakout on yields. So if the market presents us that opportunity, we're going to do that. So join us tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Take advantage of our 14-day free trial offer. You get TrendSpider for free with silver and gold level memberships. And if you don't want the Contrarian Trader and my mentorship, then simply use the link below. Get a 7-day free trial with TrendSpider. Use that discount code CON35. That gets you 35% off, the lowest rate on the internet. And with that, folks, hope to talk to you tomorrow night. And subscribe, like, you know the deal. Everybody have a great weekend. Be well.